The mortgage loan when you're buying a house. The mortgage when you're buying a house or condo. The best thing to do, and it's never too soon, to talk to your mortgage loan officer or your mortgage broker. A mortgage loan officer will possibly be at your bank where you have your checking account right now already, or it could be an online source. A mortgage broker is a person or company that will find the mortgage for you from a variety of lenders. They don't just represent one lender. Your bank, of course, let's say it's Wells Fargo or Chase or Bank of America, they only represent themselves, of course. But a mortgage broker can shop around and maybe find you a lower interest rate and a better deal on your mortgage. So those are two things to think about: your bank or your mortgage broker. And as I mentioned, it's never too soon to start talking to that person. Even if you want to buy a house in a year from now, it's not too soon to call your loan officer today and ask them about the borrowing process, because that's what you're doing. And you want to eventually, when it gets close to the time that you're going to buy your house or condo, you want that pre-approval letter, and it's free. They will give you a pre-approval letter telling you how much you can borrow. It's a great feeling once you have that pre-approval letter in your hand. And your mortgage loan officer will coach you. They will tell you which credit cards need to be paid down. They will tell you, don't go out and buy a car just before you're about to buy a house, because you don't want to add more monthly financial obligations to what you already have. So you don't want to make large purchases when you're getting ready to apply for a mortgage loan. So your loan officer is going to tell you how to improve your credit if need be. They will tell you what other debts that you should eliminate, and they will be happy to give you all this information for free starting anytime you want to, because they will hopefully close the transaction. So the mortgage, you apply for your mortgage, after you find your house and you have a signed contract and a closing date, you want to, the mortgage process will move forward. Your loan officer will orchestrate that. They will tell you when you need to pay them for the appraisal. The appraisal now is about $800. You have to pay for the appraisal. And that's usually the only expense you need to incur regarding your mortgage before the closing. So you spoke to your loan officer, you filled out your application, you've paid for your appraisal on the house. The appraiser goes to the house, he says, okay, it's worth the purchase price. Let's say you're paying $600,000 for a house. The appraiser will tell the bank if they think that they agree with the purchase price. And then what else involved? Now here's one thing, I'm going to backtrack for a second. Here's one thing do not overlook. Let's say you think that you might not be able to qualify for a conventional loan. That's a bank mortgage or a lending mortgage institution loan. Shop around, ask around to people you know, your boss, your grandparent, your uncle, your aunt, your friend, a friend of a friend, for a private mortgage. I have purchased property before using a private mortgage where I did not have to go to a bank and fill out the application and pay the extra expenses. Banks and mortgage companies, they do have extra expenses. They have points sometimes which you will pay, usually 1 or 2 points. What is it? It's just an additional fee for the lender. That's a point or two sometimes they charge. Loan origination fee, that's a good one. Underwriting fee, that's a good one. These are all in the hundreds and sometimes thousands of dollars, all these extra closing costs that are associated with banks and mortgage companies. So don't overlook the possibility that you might know somebody, or a friend of a friend might know somebody who will give you a private mortgage. Granted, the interest rate is going to be a little bit higher than the conventional, or in some cases a lot higher. There's something called a hard money loan, and it's called a hard money loan because it's hard to pay it back because the interest rates are so high. But the hard money loan is the same as a private loan, and it will come from usually an individual or maybe sometimes a group of investors. So you have your mortgage company, your bank, your mortgage broker, your hard money loan, your private sources. These are all possibilities for you to get the money to buy your next house or condo. So keep your credit either good now, if it is, or keep improving your credit if that's the case. And you want to work with your realtor to get a good price on the home that you're buying. And in some cases, you can ask the seller to contribute towards your closing costs. That's not so common these days, but it is a possibility. You shouldn't rule it out. Some sellers will be, they'll listen to that offer where you ask them to pay part of your closing costs. It could be a fixed amount or it could be a percentage. Usually it's a few $1,000s if you want something for them to chip in on the deal. But truth is, all it really does is reduce the purchase price. If you're buying a $600,000 house and the seller's willing to contribute $10,000, that's a $590,000 offer. So that's another way of looking at that. So as I mentioned in the beginning, it's never too soon to talk to your mortgage loan officer or your bank loan officer and start the ball rolling. You'll know, they will coach you, that you will know how to make sure your credit is on track and make sure your savings account is on track for your down payment. Your down payment money is going to be sitting in your savings account, or in many cases, you can get a loan or a gift from a relative or a friend for the down payment. And if you're purchasing a lower priced property, let's say it's a $200,000 condo or maybe $300,000, your municipality, the county or the city where you live might give you down payment assistance. This is not uncommon for folks who have not a huge income. Obviously there are limits on what your income can be, but you might be able to qualify for down payment assistance from your municipality, from the city or the county or the state that you live in. Veterans might have that available, that option available to them. So think about those things. Now, since I mentioned the veterans, the VA loan is a great way to go for veterans when they are looking for a mortgage loan. And again, talk to your bank officer. The FHA loan, that FHA loan, what's that? Federal Housing Authority. They will guarantee, meaning back you up. They will back you up if you're purchasing a home, and they will allow you to make a 3.5% down payment, which is pretty low. I bought my first house with an FHA loan, 3.5% down payment. That's the FHA. You have to qualify. There is a maximum amount of money you can earn, so you have to fall under that. And the home also, there's a maximum price on that, so the purchase price has to fall under that. So these are different things to think about and different ways of approaching getting your mortgage loan so you can own your own house or condo and you don't have to pay any more rent. And remember, people who are telling you, oh no, you should just keep renting. It's okay, no problem. But you are paying a mortgage when you're renting. You're just paying the mortgage for your landlord. Thank you for stopping by.